How do you work with an institution? Now, is it any different than anybody else? I mean, we tend to think of institutions, $1 billion of assets, or they've raised this big fund, and I'm going to go to them, and they're going to give me an unlimited checkbook to go out and do property. Says, I really know this. It's just not how it works. I mean, maybe back in '07 when money was flowing, '06 or something, that's just not how it works today. Let's start thinking about it. How did the institutions get their money? They went out and raised it from other people. When they raised it from other people, they told them some story. They said, we're just going to buy apartments. More likely, we're just going to buy apartments on the East Coast with populations of more than 1 million, where the job count has actually gone up. I mean, they've gone and they've had to be very narrowly defined what they're going to do with the money. Otherwise, they never could have gotten the money in the fund in the first place. So when you go with them and they say, we do, this very narrow band, and you give them something over here, all you're doing is upsetting them. You're sticking the lion with the stick. Why do that? And secondly, the other group comes and says, hi, we're a developer, we're doing wonderful things, you should do work. Wait a minute, these are busy people. I mean, if you're going to talk to them, have a real deal in hand, and be prepared for the fact that when you bring the real deal, 9 times out of 10, boom, they're going to reject it. Why? Remember where they raised the money. They have a very narrow band of things that they can do. Now, you're not necessarily going to get in advance what their acquisition criteria is. They want to keep it secret because they think they have this secret sauce that's going to make them lots of money. They might tell you, we do apartments on the East Coast, but all the secret sauce of, we only buy them in this band. Recognize these are mostly MBAs who went to some name school, and they've done all these models, and they think that they can, okay, that's the business they're in. They've convinced people to give them money. Hallelujah, they know how to do that. Don't expect them to really care what you do or what you're thinking. They've already decided what they want to put their money in. You're either going to match or you're not going to match. And you want to make it easy for them so that if it's clear they have criteria, don't send them stuff that doesn't fit the criteria. If you have their criteria, don't call and say, hey, let's go have lunch. You better have a deal that matches. And they're going to say, yes, this fit, or no, it doesn't. It goes out. Well, let's say you're the 1 in 9 or 1 in 10 that they actually talk to. There's at least on the surface some match between what you're doing and what they say they're looking for. Are you home free? Not by a long shot. Let's be realistic. They are looking at hundreds, maybe thousands of opportunities to invest their $1 billion fund. And there are 10 other people just like you that has a deal just like you. And depending on what else they put money in, they may be looking at your deal in Birmingham. They'd really like to go into secondary, third, tertiary markets. But you don't know it. They've already done a deal. An hour before you walk in, they've agreed to a deal that's in Birmingham or some other town of that size. Doesn't matter how good looking you are, no matter how close you are to doing the deal, you're not relevant anymore. So think about it as, you're not trying to get married to them, you're just trying to date them. So when you were in that stage of your life, did you date more than one person? Of course you did. Always date other people, have other different opportunities going on, because the institutions are looking at others. Now, is there a point where you finally sign an agreement and you're locked in on this deal? Yes, you are, absolutely. Don't mess around then. At that point there, you're agreeing you're not going to date anybody else. They're not going to date anybody else. You're still not married because the deal's not closed. But at that point there, neither side wants to do something to mess it up. You look at the agreement, though, there's almost always outs, and the institution generally will have more outs than you will have. Is it worth going through the pain of working with institutions? Well, if you find the right one, you might in 30, 60 days have all the money you need for this deal, and you're moving forward. Isn't that better than knocking on the door and raising in $5,000 increments for some fund that you may take forever to raise, and it's going to cost you, $10 million to raise 50? Well, it depends on the deal. I guess my point in all this is never play with just one institution, and never play with just institutions. Also work with high net worth individuals. Look with, say, Reg A or non-traded REITs for the folks that aren't accredited investor quality. Maybe look offshore with EB5. Have yourself working in different things.